Good evening, students. Welcome to the session. So we had started with the assessment of the trust or the taxation of different trusts, and we had done with respect to the AIF, securitization trust, REIT, and InvIT. REIT, we are still remaining with some of the aspects of REIT, or let's say the last aspect of REIT before we move on to solving the question. So I want somebody to quickly recap what we have done in the last class. Can anyone recap? Yes, any one of you, please, can you recap? With respect to securitization trust. Yes, Sanjay, can you revise the securitization trust for us? Yes. Sanjay, am I audible to you? Can you revise it, what we have done for the securitization trust in the last class? Or anybody else can, take up the lead to revise what was that we had studied in the securitization trust? Hi, Geeta, can you revise? Students, are you there with me? See, this is for your benefit that, if you will revise, you may tend to make some mistake, but we are there to correct you. So do not worry. You just make an attempt to recap whatever you can recollect. That is still fine. Yes. Yogesh, are you there? You can revise. Okay, no problem, Yogesh. Okay, so let us move ahead. I'm not sure, if you're interested in, participating. So that's fine because, see, it is for your benefit. My job would be very easily done if I just, like go ahead and finish the chapter. Geeta, that's all fine. You can look back, at the notes and start recapping also. But, it is essential to go through it once. So that was, why I was asking you to recap at least the securitization trust. But nevertheless, okay, let us then proceed further. So what we are remaining now under the trust is basically going to be the real estate investment trust. In that, we have discussed with respect to the distribution of different category of the income, isn't it? Now, what I want you to understand is, one second, let me just, yeah. So what I want you to understand here is, now we discussed that different distributions can happen or different set of income can be earned by the real estate investment trust. For example, we discussed with respect to if it earns the rental income directly, then in that particular case, it is exempt in the hands of REIT. And if the amount gets further distributed, it will be taxable in the hands of unit holder. Right? And we have discussed the TDS rates also on that. Then we discussed like if it receives the interest or dividend from the SPV. Now, if it receives the interest, then in that particular case, the interest again is not taxable in the hands of the, it will be taxable in the hands of the unit holder. For resident at normal rates and for non-resident, it will be taxable at 5% under 115A and the TDS will accordingly apply. And there is no requirement to deduct the TDS under 194A on interest or under 194I on the immobile property or under 194 in respect of the dividend when the SPV distributes it to the business trust or any other payer distributes it to the business trust, because there is no taxability in the hands of REIT, right? Then in respect of the dividend, we discussed that it depends on whether the SPV has exercised the option under 115BAA or not. If yes, then the dividend is taxable in the hands of unit holder. For resident, normal rates, and for non-resident, it will be at 20% under 115A. We had seen that, the institute material also refers to 10% through a derivation. So you can write 10 or 20 as per 115A. And in case the SPV is not taxed under 115BAA, then dividend is not taxable either in the hands of the REIT, also in the hands of the unit holder. Fine. Then we discussed that in respect of the any other income, if the capital gain is there for the assets covered under 112A, 112A rate will apply. This will be taxable in the hands of the REIT and it will be exempt in the hands of unit holder. For LTCG, others under 112. Then for STCG, for the assets covered under 111A, then in that particular case, that will apply. And for any other assets, then the MMR will be applicable, and any other income will also be taxable in the hands of REITs at the rate of MMR. Right? Now we are going to discuss about the repayment of capital. See, the REIT will distribute the dividend to the, or REIT will distribute the income to the unit holder. Isn't it? No problem, Yogesh. So REIT will be able to distribute the income to the shareholder or the unit holder, right? Now, it can also repay the capital. So we have the enough tax provision to tax the repayment of the current income to the unit holders. Right? So when it redistributes the income to the unit holder, it will be taxed in the same manner as it is taxable in the hands of the REIT, right? In the same characterization also, right? That we have seen for all the category of the trust. However, it can also distribute the capital back to the unit holder. The same way, we have the buyback and the dividends for the company. The same way they have given it for the unit holders, that it can give the dividend or it can repay the capital. So for the repayment of the capital, what does it say? For the repayment of capital, it says any distribution by the REIT to the unit holder, which is in the nature of the repayment of the debt or redemption of the units. So any distribution by REIT to the unit holders which is in the nature of repayment of debt or redemption of the units. This will be taxable under section 56(2)(12) under the income from other sources. So distribution by the REIT to the unit holder, which is in the nature of, not in the nature of income, but in the nature of repayment of either debt or the redemption of units. That is specifically taxable under the head E4s under 56(2)(12). Right? So this is basically not the distribution of the dividend, interest, rental income, or any other sum which is chargeable in the hands of business trust. This is apart from that, which is not chargeable in the hands of business trust. This is not the current income. So This is basically concerning distribution of any sum other than dividend, interest from SPV, rental income, which is already taxable in the hands of the unit holder under which section? 115 UA. Because this is already taxable under 115 UA, we don't need to tax it again under 56(2)(12). Or any other sum on which REIT is paying the tax. In the hands of business trust. Under section 115 UA. Correct? So this is other than these category of the sum, this will be taxable. If anything other than that is remitted to the unit holders, which is in the nature of repayment of debt or redemption of unit, this will be taxable under 56(2)(12). Now, what is the sum taxable under 56(2)(12) is? A minus B minus C. What is A? A is equal to the aggregate of all the distributions made by the business trust to the unit holder other than dividend, interest, rent, or any other sum chargeable to tax in the hands of business trust under section 115 UA. Either during the previous year or earlier previous year. So total of all the distributions which have been made other than which are in the nature of income. Right? That is my amount A. What is B? B is basically nothing but the cost of the units. Cost of the units of business trust. And C is basically the amount taxed in earlier previous year under 56(2)(12). Amount already taxed under 56(2)(12) in earlier previous year. Fine. So this is what is going to be taxed under 56(2)(12). And if A minus B minus C is loss, then 56(2)(12) will be 0. Are we clear? Yes or no?
Yes, ma'am.
Okay. Now, there is also the taxability under the capital gain. There is also a provision in the capital gain in this regard. So for the purposes of capital gain, right? When the capital gain will happen, because there is a repayment or there is redemption of the units. Right? There is a redemption of units which is happening. So there will also be capital gain. Units are nothing but the capital asset. So for the purposes of determining the cost of acquisition of the units of business trust, what you will have to do is you will have to reduce the sum received by the unit holder from the cost of acquisition reduced the sum received by the unit holder from business trust which is not in the nature of not being interest or dividend, which is exempt under 1023 FC for the business trust, rental income, because these are already taxed in the hands of unit holder under 115 UA. And any other sum chargeable in the hands of business trust. Right? Any other sum chargeable in the hands of the business trust, which is not in the nature of 56 to 12. So sum received by unit holder which is not in the nature of interest, dividend, rental income, and which is not in the nature of, which is any other sum chargeable in the hands of the business trust but not being the sum chargeable under 56 to 12. So how does it interplay? What do we see between the IFOS and capital gain? When do we go to capital gain? When do we go to the IFOS? Let us understand that. So when the distribution by the business trust to the unit holder happens, right? In that case, this should not be in the nature of this particular thing, right? Because this is taxable under section 115 UA. So if you distribute the dividend, interest, rental income, this will be already taxable in the hands of unit holder. Any amount which get taxed in the hands of the business trust, that is exempt in the hands of unit holder. So we are not talking about that. This is in the hands of business trust. So to the extent of the cost of the units of business trust. What will happen? You will reduce this particular amount from the cost of the units under the head capital gain. So you will reduce the distribution from the cost of acquisition while computing the capital gain. Are we clear? And over and above the cost of the units of business trust, there will not be any effect in the capital gain. This will be taxable under the head income from other sources. Are we clear? So when the distribution is to the extent of cost of unit of business trust, there will be no impact in EFOS. You will reduce it from the capital gain. When you pay over and above the cost of the units of business trust, you get taxed in the 56-12. Are we clear? Yes?
एक problem, ma'am, example बताएंगे.
Yes, we will do that.
Okay, ma'am.
Is this clear up till now?
Yes, ma'am.
Yes? Any questions, any doubt? Yes?
Clear, ma'am.
Okay. Now, let us understand with the help of a problem. Let's say the cost of unit is equal to rupees 1000. Distribution by the REIT is, let's consider two examples. Let's say first 1500 rupees. Second situation, rupees 2000. Right? So in the first situation, let's talk about 1500. What will happen? And okay, let's do one thing. Out of this 1500, let's say interest from SPV is rupees 500. Let's say SKCG on sale of shares is 200. And other income is rupees 100. And the same goes even in this case. So yes. What will happen in the first situation?
Since interest income is already chargeable under 115 today, we will reduce it from 1500. And other income also it is chargeable to the business trust. We will also reduce that also. And short-term capital gain on sale of shares we will also reduce it. It is chargeable. So distribution will be 1500 minus 500 minus 200 minus 100.
So your distribution that we will consider 1500, right? Out of which we will reduce 500 because this is taxable in the hands of
Unit holder.
unit holder under section 115 UL, right? Then we will also reduce the STCG of 200 because this is taxable in the hands of REIT. Yes or no?
Yes, ma'am.
Under section 111. We will also reduce the 100 because again this is taxable in whose hands? Hands of REIT at the MMR. Yes or no? Any other income is taxable in the hands of REIT. So we will reduce all of that and here my distribution becomes 800, 700. So this will be my amount A. In this case also it will be same. 2000 minus 500 minus 200 minus 100. So this will give me 1600. What is my B here?
1000. Cost of acquisition.
Cost of acquisition. What is C? 0. There's no amount taxed on you. So A minus B minus C becomes negative. So here this will be deemed to be 0. Right? This is for the purposes of 56 to 12. So therefore, to the extent of the cost of acquisition, like distribution to the extent of cost of acquisition, we will consider in the capital gain when you will sell the units. So this sale consideration will be in the year of sale of units, right? Or the redemption of units. So whatever price I am redeeming at, right? Here, let's say I'm redeeming at this particular price itself, 1500. Out of which this is my particularly sale consideration is only 700. Right? But here my cost of acquisition which is there, which is 2000 over here, this will go reduced by what amount? The cost of acquisition will be reduced by yes, sorry, 1000 is the cost of acquisition, not 2000. So 1000 here will get reduced by yes. What will you be reduced 1000 by? Again 500, 200 and 100. Yes or no? And the
एक और बार एक्सप्लेन करेंगे वो कैपिटल गेन.
Yes. So capital gain mein what they have said is for the cost of acquisition, reduce the sum received by the unit holder from business trust, not being the sum in the nature of this. Yeah. So 1000 is my cost of acquisition. Now from this, I will only reduce this particular amount. I'm not going to reduce this. The sum which is in the nature of repayment of capital, not in the nature of income. I don't need to reduce 1500. Because from 1500, I have already reduced these particular amounts, 500, 200, 100, because these are already taxed either in the hands of unit holder or REIT. So from 1000, I will reduce 700. So my cost of acquisition will be 300. Yes? Yes or no?
Yes, ma'am.
Okay. In the second situation, when I'm considering 1600, here, my B is 1000, C is 0. So my 56 to 12 is 600. Will there be any impact in the capital gain? No. Because what we are paying is over and above the cost. So I don't need to reduce anything. I can't reduce 1000 minus 1600 and make the cost negative. Right? So therefore, if you are paying to the extent of the cost, you will reduce the distribution from cost of acquisition under that capital gain. If you are paying over and above the cost of units, the excess will be taxable under 5622. Is this clear now?
यस मैम. तो मतलब टोटल जितने भी पे कर रहे हैं उस पे टैक्स लगा रहे हैं.
Yes.
In the hands of income from other source and capital gain. Okay.
Yes.
Okay.
Any questions, any doubt? Okay, let us solve a question from the module. One second. Is the screen visible?
Yes, ma'am.
Okay, first go through the question and let me know how would you attempt. Yes, how would you attempt this? How will the interest income be taxed?
Interest income, it is taxable in the hands of the unit holders. So
It will be taxable in the hands of the unit holder,
unit
right?
holders. Yes.
So what they have said here is that they have distributed 10 crores to the unit holder, right? They've distributed 10 crores, and now out of 10 crores, so we will characterize this 10 crores in the hands of the unit holder in the same nature as we have here the characterization in the hands of business trust. So it will not be taxable in the hands of the business trust because of the exemption under 1023 FC, and the beta will also not be required to deduct the TDS on this interest income. Yes or no? So this will be taxable in the hands of the unit holder. The business trust will be required to deduct the TDS 10% to resident, 5% to non-resident. And this will be taxable in the ratio of this 4 is to whatever the total ratio comes to. Right? What about the dividend income from beta? They have given the information. Assume that beta does not opt to pay tax under 115 BEE.
Dividend income is taxable in the hands of unit holders, but since it is not opting to pay tax under section 115 BEE, then it is not taxable to the hands of unit holders also.
So this is exempt in the hands of business trust. The SPV is not required to deduct TDS under 194. This will also not be required taxable in the hands of unit holder because beta has not opted for 115 BAA taxation. Clear? What about the short-term capital gain on sale of listed share for 1.5 crores?
Taxable in the hands of the REIT under section 1114.
Under 111A. And this will be exempt in the hands of unit holder under 1023 FD, sorry. Fine. Then short-term capital gain on sale of developmental property 1 crore.
Taxable in the hands of REIT MMR at the rate MMR.
Correct. At the MMR, and this will be exempt in the hands of the unit holder. Right? Interest received from investment in unlisted debentures of real estate company 10 lakh.
Any other income taxable to the REIT at MMR.
Correct. So this will again be taxable in the hands of the REIT at the MMR, and this will be exempt in the hands of the unit trust or business holders, unit holders. Rental income from directly owned real estate asset, 2.5 crore.
Rental income, it is taxable to unit holders. Uh, if it is a residential house, then it will be taxable in the income from a house property for unit holders, and if it is a commercial property, then it will be taxable PGBP only.
Correct. So the SPV is not required, so the payer is not required to deduct TDS under 194I when it pays to the REIT. It will be exempt under 1023 FCA for the REIT. And when the REIT distributes it, it will have to deduct the TDS under 194 LBA for at 10% for resident and at rates in force in case of non-resident. Right? And as you rightly mentioned, if it is a residential, it will be chargeable under head this income from house property IFHP, and if it is commercial, then as per the Chennai property ruling, it will be taxable under the head PGB. Clear? Is the concept understood by all of you?
Yes, ma'am.
Okay, so let us proceed further. Now we move to the concept of the charitable trust. So we are done with this. Now we move towards the concept of the charitable trust. Now, tell me one thing. How are these charitable trusts functioning? Any idea? Yes?
There will be settlers who will be donating to the trust. There will be trustees who will be managing the trust, and they will be the person who will be getting benefit from the trust.
Yeah.
For
So the
the
charitable trust which is there, this is different from your securitization trust, your AIF or your REIT. All of those trusts what we have studied is basically having certain objective of investment. But charitable trust basically functions for the charity. It can have multiple objectives for medical, for education, for animal welfare, for human welfare. As a religious trust, it can have multiple temples and all of that. It can have different objectives. And we are going to see what is a charitable trust. But understand one thing, under the Income Tax Act, there are two regimes that are being operative as of now. Of course, the first regime is going to die soon. But currently, the trust operate under two regimes. One, the first regime, we call it as Section 1023C. This is the first regime. And the second regime which is there is under Section 11 to 13. Okay, so the first regime which is there, these are the trusts which are registered under 1023C. What are these kind of trusts? So there are certain specific trusts which are registered under 1023C. There are certain specific trusts which are registered under 1023C. Multiple kind of, this donation trust which are there, government trust which are there. So those are the kind of trusts which are like specifically listed under 1023C. Your, Rajiv Gandhi Trust and all of those trusts which are there, which are specifically listed to be covered under 1023C, are something which are covered under that particular regime, which are specifically listed under the section itself. There are many trusts which are specifically listed under that section, like Prime Minister's National Relief Fund Trust, Prime Minister's other trusts which are there, Clean Ganga Fund, Chief Minister Relief Trust. So these are some specific trusts. Secondly, there are certain trusts which are having the education or medical objective. So the educational institutions which are, or the medical institution which are there, which are wholly or substantially financed by the government. So educational trust which are there, which exist solely for educational purpose. And not for the purposes of the profit.
मैम नोटबुक अपडेट नहीं हो रहा है।
अच्छा एक सेकेंड, आई थिंक वो हाँ स्क्रीन शेयरिंग स्टॉप हो गया, सॉरी। नॉट फॉर द पर्पसेस ऑफ प्रॉफिट और medical institutions which are wholly or substantially financed by the government. I don't know today, but I know about So what does we mean by this? What are these kind of trusts which are wholly and substantially financed by the government? So where the government grants are greater than equal to 50% of the total receipts. So wholly and substantially financed by government means they get the government grants which are then 50% of the total receipts. So these are the trusts which are specifically covered under 1023C. One is a specific trust. Second, educational trust existing solely for educational purposes, not for the purposes of profit, or the medical institutions which are wholly and substantially financed by the government, which means government grants are greater than equal to 50% of my total receipt. Third is the educational trust. Again, not for the purpose of profit or the medical institutions which have the aggregate annual receipts less than 5 crores. Where so let's say if I'm a trust having the university whose receipts are 4 crores and it also has a hospital where the receipts are 3 crores. Can I be covered under this? The answer is no. because the total receipts are greater than 5 crore. So only where the combined total receipts are less than 5 crore, I will be covered under 1023C. Are we clear?
Yes,
Yes
ma'am.
or no?
Yes, ma'am.
Right? Any questions and doubt?
No, ma'am. Clear, ma'am.
Clear? Then we have the category of the trust here. Which include the charitable trust, religious trust, all other charitable trust, religious trust, or the educational institutions or medical institutions whose annual receipts are more than 5 crore. So these are also covered under 1023C. However, what is the difference between this category C and the category D? So I'm just putting this as a category. The A, B, C, three categories which are there. These categories are covered under 1023C and they have an unconditional exemption. They do not require a separate registration or approval. So these A, B, C category gets unconditional exemption under section 1023C and no separate approval is required. However, for the category D, which is there, this category, here this is eligible for 1023C exemption only when it gets the specific approval. So this is eligible for so without getting the approval, it can't claim the exemption under 1023C. Now, there is a catch here. For the A, B, C, since these are not requiring any approval, these trusts still qualify under 1023C. But the category D, which is there, any charitable, religious trust, educational institution or medical institution having the annual receipts more than 5 crore, these trusts cannot claim the or cannot obtain the approval under 1023C post 1st October 2024. So these trusts which have got the approval before 1st October 2024 can continue to claim exemption under 1023C. So if they are approved, before 1st October 2024, or they had filed the approval before this particular date. So post 1st October 2024, this category cannot apply under 1023C. It needs to obtain registration under the second regime. So with respect to category D, the first and the second regime have got merged post 1st October 24. Is this clear?
मैम कैटेगरी ए बी सी के लिए तो 1023 से एप्लीकेबल ही रहेगा ना मैम?
Yes, as I said, for category A, B, C, since they do not need to obtain any approval, they have unconditional exemption, so they are still eligible under the 1023C. It's only for category D, which used to get the approval under the 1023C. The government thought that, having the two schemes is too much, so they merged it and made it under the second regime. Is this clear?
Clear, ma'am.
Okay. Now, here there is one point which is mentioned: educational institution existing solely for the educational purpose. Now, what do we understand by the solely for the educational purpose? So, the Supreme Court in New Noble Educational Society case, which is also mentioned in your module, has observed that the solely does not mean that the educational institution can have the other objectives along with the education. Like it can't be, running, let's say, a hostel and side mein an educational institution. It can have the ancillary or incidental income, which is in the course of providing the education. Like it can have the hostel in the university. It can operate the bus facility. It can operate the library facility. It can operate the store inside the school or university for the sale of books. That is eligible for 1023C. However, let's say if it is renting out the halls, it is renting out the auditorium to outsiders. This is not incidental to the object of imparting education. So solely does not mean that if it is predominantly providing education, it will qualify for 1023C. No. Solely means exclusively 100% educational objective. Fine. So you can write it here. Solely means exclusively and not predominantly. Right? So if the objective of the institution is to earn profits, then 1023C is not applicable. It should not be for the functioning for the objective of profit. It can earn profits. See, everybody will earn profits at the end of the day because they would want to grow the school, university, they can't run in losses. But they should reinvest the profit in doing the educational activity. They should not be, taking back home. If they are having the intention of earning the profits and taking back those profits home, that is a problem. There is no bar on generating the surplus from the education activity. However, if the same is reinvested again in providing the better educational facility, 1023C is available. But if you take back the home, like for example, let's say for example, if the coaching institutes are there, they are working for the education. But can they claim exemption under 1023C? Answer is no, because they have the motive of profit. But whereas if you look at the school, you look at the colleges, they are not working for profit. They do generate the surplus, they do generate the profit, but they will reinvest that amount in creating more educational facility. Are we clear? There is no bar on generating the surplus from the course of providing education. However, the same should get utilized for educational activity. Fine. So, Supreme Court in New Noble Educational Society has held that this has been held in New Noble Educational Society. Supreme Court. What do we mean by solely and solely for educational purpose? Solely means 100% for educational. So you can just write it here. If institution provide facilities to outsiders, same is not characterized as incidental to the object of imparting education. Okay, but if the institution earns profits from incidental activity related to the education. Example, sale of books, income from bus facilities, hostel, plus it maintains plus maintains separate books of accounts for the incidental activity. Then this is eligible for. Are we clear? So
Yes,
what do
ma'am.
we mean by educational trust? Existing solely for educational? It can do other activities, but that should be incidental to the education. Right? Like for example, sale of textbooks, library, books, hostel, bus facility, and it should maintain the separate set of books of accounts for that incidental income. It can't have a technically new set of income which is not related to education. Fine. Also, it should not be working for the purposes of generating profit. Having the surplus is not a bar, but that surplus should be reinvested for educational facility. Then only it can qualify for 1023C. This point is even there for less than 5 crores. Are we clear?
Yes, ma'am.
Then what kind of education is covered over here? Whether diplomas, certificate courses will also be covered here? The answer is yes. So Supreme Court in Peters, St. Peter's Educational Society. The Supreme Court in that particular case has held that diploma and the certificate courses are covered under the educational objective for the purposes of Section 1026. Are we clear?
Yes, ma'am.
Okay. So this is the entirely first regime that we have looked into. The second regime is under Section 11 to Section 13. Now, what does this section talks about? Section 11 talks about income from property held under trust wholly for charitable or religious purpose. This will be exempt under Section 11. What does it say? Income from the property held under the trust. Income from property held under the trust, which is wholly or partly for charitable and religious purposes. So here it should include wholly or partly. For charitable or religious purposes, then it will be excluded from the total income. Are we clear? Now, what do we understand here by the term charitable? So, this term is defined under section 250. So, charitable purpose includes relief of poor, education, yoga, medical relief, preservation of environment, including watersheds, forest, wildlife, preservation of monuments, and advancement of any other object of general public utility. So this is what is the charitable purpose is defined under section 215 of the Income Tax Act. So it says the income of the religious or charitable trust in respect of the income from the property held under the trust is exempt under section 11. So income derived from the property held under trust only for the charitable or religious purposes is exempt under section 11. But what is charitable? So the objective of the charitable is given under 250. It includes the relief of poor, education, yoga, medical relief, preservation of environment, preservation of monuments, advancement of the any other object of general public utility. Now the last clause which is there, advancement of any other object of general public utility, what does this mean? What is general public utility? This has not been defined. So this has been subject to lot of interpretation over the period of time by the courts. So it can include anything. For example, in one of the case, Supreme Court had observed that where the Gujarat Maritime Board, which was established for the purpose of development of ports in India within the state of Gujarat. Right? So Gujarat Maritime Board was set up to manage the ports in the state of Gujarat. Now, this was considered to be having the object of general public utility because this was for the development of ports in the state of Gujarat. There was no profit motive. The board was under the legal obligation to apply its income for the development of ports in India. And therefore, the Supreme Court regarded it as a charitable trust. So, what is this advancement of general public utility? Can somebody, as a coaching institute who is functioning for, profit motive, is a charitable institution? The answer is no. So, if you are functioning on commercial basis, you cannot say that you have the object of advancement of general public utility. However, if you are earning the profits, as I said, there is no bar on earning the surplus. But if you are utilizing the surplus for promoting the objects which are necessary for the welfare of the public at large, that shall be considered as the advancement of general public utility object. Are we clear? So there was this decision of, again, Supreme Court in the case of Madras Stock Exchange. Madras Stock Exchange said that we are functioning for the advancement of general public utility. However, its claim was rejected because it was carrying out the activity on a commercial basis. If it was, reinvesting that income in utilizing it for public welfare, that's a different story. But if you are working out on commercial basis, that is not the intention of this particular clause of advancement of any other object of general public good. Further, the Act provides that if the activities are carried out, in the nature of trade, commerce, or business, for a cess or fee, irrespective of the application of the income from the activity. This shall not be regarded as advancement of any other object of general public utility. Are we clear? Yes or no?
Yes, ma'am.
Okay. So, if the activities are carried out in the nature of trade, commerce, or business, any activity undertaken that is not in the nature of advancement of any other object of general public utility. And this is irrespective of the fact that how you apply that income. So, let's say, for example, if I have been doing the business, right? If I'm doing the business and I'm applying that income for the purposes of the CSR activity, then that doesn't mean that I am into the charitable activity. Are we getting that point? So this is irrespective of how I apply the income. If I am doing the business, that will not be regarded as the advancement of the object of general public utility. Any question, any doubt?
Clear now?
Right? Then there is an exception to this. What is the exception? The exception is that if activities are undertaken in the nature of or in the course of actually carrying out the advancement of object of general public utility. The receipts from the activity is less than 20% of the total receipts of the trust. Then in that case, even if the activities are in the nature of trade, commerce, or business, it shall be regarded as advancement of any other object of general public utility. Are we clear? So what they are essentially trying to say is that if you carry out the activity in the nature of trade, commerce, or business, now irrespective of the fact that these kind of activities that you're carrying out in the nature of trade, commerce, or business, but you're applying that income, let's say for a charitable activity, that would still not be regarded as the charitable activity. Right? So, trade, commerce, or business is when your objective, then it would not be regarded as a charitable activity. However, there's an exception. If these activities which are there, these are basically actually in the nature of advancement of that objective. These are basically in the nature of advancement of that object of general public utility. And the receipts from these activities are less than 20% of the total receipts of the trust. Right? So in that particular case, we will regard it as advancement of any other object of general public utility. So, let's say, for example, if I'm running a cottage industry in which I have hired few employees, I have the equipments. Now, this is, let's say I'm working for the poorer section of the society. Now, I am doing a trade, commerce, or business. Right? However, let's say, for example, here I am having the objective of the advancement of the general public utility, and the receipts from this is less than 20% of the total receipts of the trust. Or for example, I'm working for the welfare of the industrial workers. Right? So in that particular case, it can be regarded as the charitable objective. Are we clear? Yes or no? So there is an exception to this. In that case, it can be regarded as the advancement of the any other object of general public utility. Moreover, this exception which is there, this will not be applicable to the activities A to F. This is only applicable for activity J. Yes or no? So, even if the activities are between A to F of the trust, for example, the trust is having the activity of relief of poor. And in that case, whether will you check that whether its trading receipts are greater than 20% of total receipts? Answer is no. So in that case, we will not check that. So in that case, even if the trading receipts are greater than 20% of my total receipts, activities will be charitable. It will still be charitable activity, as the exception applies only to activity G. Are we clear?
मैम अगर ए टू एफ में अगर ट्रेड कॉमर्स या बिजनेस कर रहे हैं तो वहाँ पे तो जो भी प्रॉफिट आ रहे हैं सेम उसमें ही अप्लाई कर रहे हैं तो काइंड ऑफ उसमें ही अप्लाई कर रहे हैं इसलिए वो यही होगा ना एजम्पशन मिल जाएगा.
Yes.
Okay.
So there is one here case that I would want to discuss, which is Ahmedabad Urban Development Case, Supreme Court judgment, which is again there in your module. What does this case talk about? It says that whether an entity is into charitable objective or not. To find out that, you need to find out if it is earning a very normal markup on the cost while providing the services or a significant markup. So you need to identify whether it earns normal markup on cost or a significant markup. If it is significant, then it can be said it is engaged in trade, commerce, or business. And then you need to test that whether the receipts from that activity are greater than 20% of total receipts. If it is nominal markup and the activity is incidental to the objective of general public utility, plus you maintain the separate books of accounts, this is not in the nature of trade, commerce, or business. If profits are nominal and activity is incidental to the object of general public utility, plus separate books of accounts are maintained, then it is not engaged in trade or commerce. Are we clear?
Yes, ma'am.
Let us look at one question from the module to understand this. So an institution having its main object as advancement of GPU received 30 lakhs in aggregate from an activity in the nature of trade. The total receipts of the institution including donation were 140 lakhs. It applied 85% of its total receipts from such activity for the main object, that is advancement of GPU. What would be the tax consequence of such receipt and application thereof by the institution? Yes?
Uh, 30 lakhs is more than 20% of the 140 lakhs.
Yes.
So it will not qualify since it is trust is for advance of GPU for F category, uh, and it is having trade commerce nature of a trade, and 30 lakhs, which is receipts, is greater than that of the total receipts of 20% of the total receipts of 140 lakhs. Then it will not be applicable, right, ma'am?
Correct. So as the main object of the institution is advancement of the general public utility. And this institution has received 30 lakhs in the nature of trade, which is more than 20% of 140 lakh. 20% of 140 is 28 lakhs. Now, irrespective of the fact that it applies this 30 lakh for its main objective, doesn't matter. This is in the nature of trade. So this trust will lose its charitable status. Right? Because irrespective of the fact that it is utilizing it for the general public utility objective, doesn't matter. Its receipts are more than 20 lakh, which is in the nature of trade. It will lose its charitable status. Then it's asking, would your answer be different if the total receipts were 150 lakh? Answer is yes. Because 150 lakh, the 20% comes to 30 lakh. So then it is less than the 20% of the total receipt. It will not lose its charitable status. Then it's still fine. If you have less than equal to 20%, that's still fine. And then the third question is, what would be your answer if the main object is the relief of poor? And the institution gets 30 lakh from trading activity when its total receipts are 140 lakh and applies 85% for its main object.
Since it is not for the advancement of general public utility, it is from A to E. We don't have to check for the 20% of total receipts. So
Correct.
since it is applying most of the income to the same purpose, it will be charitable trust only.
Correct. So here the restriction will not be applicable because here the objective is relief of poor. Then even if its trading receipts are more than 20% of the total receipt, it will still be eligible to claim the exemption under section 10. Are we clear?
Yes, ma'am.
Okay. Any questions, any doubt?
Clear.
Yes? Clear?
Clear.
Okay. Let us take a break over here. Let's start the break. Okay. So this was about the advancement of the object of general public utility, right? Now, how do you consider the trust eligibility, right? Like, how do you consider whether this trust is eligible for the exemption under 11? So, as I told you, like under 1023C, prior to 1st October 2024, the trust other than the category ABC had to apply for the approval. So similarly, under section 11 also, to claim the exemption of income, the trust have to mandatorily apply for the registration. So if they do not have the registration in place, they would not be able to claim the exemption under section 11 or under section 1023C. So the trust need to apply for the registration under section 12 for claiming the exemption under section 11. If they do not claim that, if they do not apply, if they do not get the registration, then the trust will certainly not be able to claim the exemption under section 11. This is very, very clear. Yes? So the trust has to apply for the registration. The registration under 1023C is not possible after 1st October 2024 for the trust which have to get the approval. So the trust have to now take the registration under section 12AP. Are we clear? So how does the registration functions? Let us understand. The registration of the trust. So before the commencement of the activities, before a trust can commence the activity, the trust has to apply for the registration, a provisional registration. So before a trust commences its activity, it has to apply for a provisional registration. So obviously it can't get the final registration because it has not anyway commenced its activity. So it has to apply for a provisional registration. Like it will get a provisional registration. So the trust has to apply for a provisional registration 1 month prior to the commencement of the activity or 1 month prior to the commencement of the previous year. So what is the time limit? 1 month prior to the commencement of the previous year. And what will be the validity of this registration? This will be valid for the period of 3 years from the AY for which the registration is sought. Are we clear? So, the provisional registration shall be effective from the previous year in which the application is made. Are we clear? So, 3 years from the application is made. Are we clear? So this is a provisional registration before the commencement of the activity. If the activities are already commenced, then you need not obtain a provisional registration. Then you need to directly obtain the final registration. Correct? So if the activities have already commenced, then you need to directly get the final registration. Or where you have been provisionally approved or provisionally registered under 12AB, then you can go for again and the 3 years are set to expire, then you can go for the final registration. So either if the activities are already commenced or if the provisional registration is about to expire, because the provisional registration is given for the first 3 years. Then you can apply for the final registration. Are we clear? Now, what is the time limit? So, if the activities are already commenced, then within the 6 months of commencement of activities, you need to apply for the final registration. Or if the provisional registration is about to get expired, then in that particular case, you need to get the again final registration within the 6 months from the 6 months prior to the expiry of the provisional registration. Again, what is the validity of the final registration which is given to you? For how long the final registration will be valid? So the validity period will be 5 years. Are we clear? So the validity period for the final registration is given for the 5 years from the assessment year from which or following the financial year in which the application is made. Right? So, in case of the final registration, so for the 5, it will be given for the 5 years from the AY for which it was registered, or from the commencement, or for the from the AY following the financial year in which the application is made. Are we clear? Any question? Yes? So this registration will be given for the 5 years. Or in case of the provisional registration was already given, then 5 years from the AY from which provisional registration was given. So it will be given retrospectively, basically. In case you have in case you have commenced the activity, then it will be given for the 5 years from the year in which application is made. In this case, it is, sorry. Now, understand one thing. There has been an amendment here. What has been the amendment? The amendment is made with respect to the trust whose total income before the exemption under section 11 is less than 5 crores during the last two preceding previous year in which the application is made. So, a trust having total income less than equal to rupees 5 crore in each of the two preceding previous year to the previous year in which application is made. So for these kind of trust, the registration will not be valid for the period of 5 years, but 10 years from the AY in which the application is made. So for the small trust, in order to ensure that they don't have to apply for the re-registration within 5 years window, this particular 10-year threshold has been given. Are we clear? So this has been an amendment which has been made in this particular year. But this 5 crore turnover, this total income has to be checked for both the years separately. So it should be less than 5 crore in both the years, not in aggregate. Or not in one of the years. Are we clear? Now, what if the registration, which the final registration is given, this is going to get expired. So this will expire after 5 years or 10 years. Right? So if the final registration is going to get expired and you want to renew it, then for the renewal of the registration, you have to do 6 months prior to the expiry of the 5-year or 10-year. So, after every 5-10 years, you will have to renew it, right? So, renewal of the final registration. Right? So, renewal of the final registration, which is there. When should you do it? 6 months prior to the expiry of final registration. Again, for what period it will be given? Again, it will be renewed for another 5 years or 10 years as the case may be. So this will remain same. Okay? Sorry. Yes or no?
Clear, ma'am.
And when this particular registration is to be made, to whom will you make the registration? How will you make the registration? So the registration application has to be filed online. This is an entirely now online process. Earlier, it used to be the case that we used to go to the Commissioner of Income Tax to get the registration. Now, this registration of Trust 112 AB is entirely an online process. And this registration has to be granted by the Principal Commissioner or Commissioner of Income Tax. So the trust, in order to obtain the registration, it can apply for the final registration at any time after the commencement of the activity. This registration is given by the grant of registration is by the PCIT or the CIT, Commissioner of the Income Tax. So they give the registration. And before giving the registration, they can look at the application, they can look about the genuineness of the activity, they can call for any documents or information as may be necessary to give the registration. And within a period of 6 months from the end of the quarter in which the application have been received, other than in the case of provisional registration, they will have to pass the order either granting the registration or rejecting the application and cancelling the registration. But whatever they do so, they have to give the opportunity of being heard. So in all these cases, the Commissioner of Income Tax has to pass the order within 6 months. Within 6 months from the end of the quarter. From the end of the quarter in which the application has been received. And in the case of provisional, it is not 6 months. The time limit has been given is 1 month from the end of the month. In which application is received. But in the case of the provisional registration, the PCIT may not make any detailed inquiry because this is a provisional registration. Right? It's a provisional. It is not a final. When it is the final registration, they will make a detailed inquiry. Are we clear? Any question, any doubt?
क्लियर मैम.
Okay?
मैम
Yes.
अभी 3 साल तक प्रोविजनल रजिस्ट्रेशन वैलिड है ना मैम. तो अब
Yes.
सपोज 2 साल के बाद अगर अप्लाई कर रहे हैं फाइनल रजिस्ट्रेशन के लिए, तो फिर बाकी का जो सिर्फ 3 साल ही और अप्लाई वैलिडिटी रहेगा ना मैम फाइनल रजिस्ट्रेशन का.
Final registration 5 years or 10 years in case of the trust having the total income less than 5 crores.
मतलब सपोज अभी प्रोविजनल रजिस्ट्रेशन पे 3 इयर्स तक चला सकते हैं, उसके
Yes.
बाद में फाइनल रजिस्ट्रेशन ले तो और वहाँ से एप्लीकेशन जब करेंगे वहाँ से 5 साल.
Yes.
ओके.
Okay? So this is without detailed inquiry. Any questions, any doubt?
क्लियर मैम.
Okay. Now, how does the trust has the taxability of its income? That is what we are going to understand. So we are going to go as per the approach of statement of total income. So a trust basically files a trust doesn't have the normal we have PGBP, IFOS like that. The trust is having the income in a different manner taxability. I'm sorry. So the trust income is taxed in a little different manner. So the exemption that the trust get under section 11, it's dependent on that whether it is applying its income for the charitable or religious purposes in India or not. If it is not applying, it will not get the exemption. So basically, here we prepare a statement of total income. So the first thing that we have is the income from property held for charitable or religious purposes in India. Held under the trust for charitable or religious in India. So this is the income that I start with. Now, even though here I talk about the term income, even though here I talk about the term income, but it doesn't mean the net income. Here I will consider the gross receipts. Here I will consider the gross receipts. I will not reduce any expenditure over here. Right? Here I am going to consider the gross receipts. Then secondly, what else we are going to consider over here is the voluntary contributions. Basically, these voluntary contributions are donations. Yes, these voluntary contributions are nothing but donations. So, where let's say for example, the sums are received as a voluntary contribution. These voluntary contributions which are there, these are considered as the income of the trust. Except the voluntary contributions which are given with a specific direction that they shall form part of the corpus of the trust. So other than the corpus donation. What is the corpus of the trust? What is a corpus donation?
Donation for specified purposes.
Yes. So corpus donation are basically one which goes towards the capital purposes, towards the corpus, towards the capital of the trust. So corpus donations which are received by the trust are exempt from the income if these donations are received with a specific direction that they are going to be kept in the corpus. So the corpus donations which are there.
मैम कॉर्पस डोनेशन का मतलब एक और बार समझाइए.
Corpus is basically my capital. The trust has corpus, which is a capital which is kept to be used for a specified purpose. It can be for, let's say, example, investing. It can be for, let's say, constructing a building. It is basically the capital of the trust. The day-to-day donations which are received, that will form part of the income. But the corpus donations, the donations which are given with a specific mandate that they should go towards the corpus of the trust, these are not to be taxed. So this is not the income, or rather this is exempt. Provided there is a condition that this should be deposited in the modes specified in section 11.5. So the donations that are given with a specific direction that they shall be forming part of the corpus of the trust. And provided they are invested in the mode specified in the section 11.5, they will be considered as the exempt income. Are we clear? Now, what are the modes which are given under section 11.5? What do we mean by the investment in the modes specified in the section 11.5? So 11.5 talks about different modes of investing the corpus amount. Different modes of investing the corpus amount. The capital amount. It talks about investment in the government saving certificate, deposits in the post office saving bank, deposits with any scheduled bank or a cooperative bank, investment in the Unit Trust of India, investment in the GSEC, investment in the debentures issued by the government, investment or deposit in any public sector company, deposits with the financial corporation which are providing long-term finance for industrial development, or deposits with the bonds of the bank or a company which is formed for long-term finance for construction of houses, residential houses, or deposits with a public company for long-term finance for urban infrastructure. So basically depositing in the modes which are backed up by the government, right? Or investment in the immovable property. So these are the investments which are permitted under 11.5. So if you invest this corpus donation into the mode specified in section 11.5, then this will not be considered as the taxable. This will be considered as the exempt. Right? So if the trust receives the voluntary contribution with a specific direction that this should be utilized for corpus of the trust, for setting up, let's say, laboratory, for setting up, let's say, building. So this will be considered as the exempt income, provided this is invested in the mode specified in the section 11.5. Fine. Secondly, if the voluntary contributions are received, with respect to the repair of the religious trust, right? So if the corpus donations are received with respect to the, let's say, repair of the or renovation of the religious trust, then in that particular case, it will not be considered as income. So again, if the corpus donations are received for repair or renovation of religious trust. We are only talking about the religious trust at this point. We are not talking about the charitable trust. Right? So if any voluntary contributions are received in respect of the religious trust for the repair of the religious trust. For the repair or renovation of the religious trust. So, for repair or renovation of the religious trust. Then, this particular amount will not be considered as income. If the amounts are utilized by the religious trust for the purpose for which it was received. So, any sum which is received as a voluntary contribution by a religious trust for repair or renovation of, let's say, temple, gurdwara, mosque, church, whatever, at its option, it may be treated as forming part of the corpus of the trust, provided this is applied for the purpose for which it was received. It is not utilized for making contribution or donation to any other trust. Is separately identifiable and the amounts are invested in the mode specified under section 11.5. So this is also invested mode specified under 11.5. However, if this religious trust violates any of these conditions, this will be considered as the deemed income in the previous year in which the conditions are violated. So, if conditions are violated, then this will be deemed income in the previous year of violation of conditions. Are we clear? Sanjay, what is the property in the statement income from the property? Property held under trust is basically the assets held under trust. So income from the assets held under the trust, basically income from assets which are used for the charitable purposes. Are we clear? Any questions, any doubt?
Clear now.
Okay. So this is about the corpus donation. What can be the other category of income? Income from the anonymous donations. Income from the anonymous donation. What do we mean by the anonymous donation?
डोनर का नाम नहीं पता.
Correct. So anonymous donations is that we do not know who has given the donation. Who has given the donation, we do not know. That is the anonymous donation. Now, whether we will get the exemption in respect of the anonymous donation, that is subject to the limits which are given. So, the exemption provision is restricted up to a certain limit. Like exemption in terms of that how much I can apply from the anonymous donation. So if the trust receives an anonymous donation, you have the applicability of section 115 BBC. So in that particular case, beyond the limit given under 115 BBC, the anonymous donations are taxable at a flat rate of 30%. So what does 115 BBC provides? What does 115 BBC provide? So 115 BBC says that the anonymous donations which are there are taxed at the rate of 30%. And below that limit, it would be subject to the normal provision. So what has the limit been given? So limit is 5% of the total donations received or rupees 1 lakh, whichever is higher. Now here, total donations means what? What will it include? So this will include voluntary contributions, all the voluntary contributions. This will also include any anonymous donations. Total donation will include the anonymous donations, as well as it will include the corpus donation also. So when I consider this limit of 5% of total donation, I will consider all kind of donation. Voluntary contributions, anonymous donation, as well as the corpus donation. So beyond this specified exemption, the anonymous donation are taxed under 115 BBC at the rate of 30%. Are we clear? Yes or no?
Yes, ma'am.
तो एग्जामिशन अमाउंट तक का कोई टैक्स नहीं है. आफ्टर दैट इट इज टैक्स एट 30%.
Correct.
Okay.
So the balance donation which is up till this particular limit, that will not get taxed provided you apply it for the charitable purposes. Fine?
Okay.
So up to this limit, this is exempt if applied for charitable purposes. Clear? So let us understand with an help of an example. let's say my total donations are 15 lakh. In the second example, let's say 30 lakh. And third example, let's say 40 lakh. And let's say my anonymous donation received are 4 lakh, 7 lakh and 10 lakh. Now what will be my exemption? And what will be taxed under 115 BBC?
Exemption is 1 lakh, since 5% of total donations is 75,000 and or 1 lakh is higher, so exemption is 1 lakh and tax under BBC is 4 minus 1, 3 lakhs.
Correct. Second situation.
Exemption is 1.5 lakhs, 5% of 30 lakhs and tax is 5.5 lakhs.
Correct. Third. 2 lakh, right?
2 lakhs, 8 lakhs tax.
Correct. So the donation eligible for application of income is how much? Here it will be 14 lakh. Sorry, 12 lakh. 15 minus 3. In the second case, it will be 24.5 lakh and 32 lakh. Right? So this will be eligible for application of income. Clear? Yes or no?
Yes, ma'am.
Now understand the exception to anonymous donation. So this provision does not apply to a trust which is created wholly for religious purposes. So if a trust is created wholly for religious purposes, then in that case 115 BBC does not apply. However, if a trust is created for partly charitable, partly religious purposes, then in that particular case, what will happen? So if the anonymous donations are received by a trust which are created for wholly religious, then in that case 115 BBC doesn't apply. However, anonymous donation received by trust created for partly charitable, partly religious purposes, in that case also 115 BBC doesn't apply. In that case, it applies only if the anonymous donations are received for any university or educational institution or hospital or medical institution. Are we clear? So just write it down. 115 BBC will apply only if the donations are received for educational or medical institution. Is this clear? Yes or no?
Yes, ma'am. Clear, ma'am.
Okay. Now, one more important point with respect to the anonymous donation. So, in respect of the anonymous donation, in case the income is received, the anonymous donations are received in respect of the corpus of the trust with a specific direction that they shall form part of the corpus of the trust. So, if you get the anonymous donation, if a charitable institution gets the anonymous donation with a specific direction, that this shall form part of the corpus of the trust. Now, usually, voluntary contributions which are received with a direction that they are towards the corpus, these are exempt, provided they are invested in mode specified in 11.5. What about the anonymous donations received with a direction that they shall be towards the corpus of the trust? What will you do in that case? Will you exempt it? The answer is no. That shall not be exempted. So, the anonymous donations or you can write it here, except if anonymous donations are received as corpus donation. These are not exempt. So these shall be taxed under section 115. Are we clear? Yes?
Clear, ma'am.
So anonymous donation forming part of the corpus of the trust will not be exempt. A religious trust receiving the anonymous donation will not be having the applicability of 115 BBC. Are we clear? If a trust is created partly for charitable, partly for religious, again 115 BBC doesn't apply. But if it is given for the educational institution or medical institution, then 115 BBC will be applicable. Are we clear?
Yes, ma'am.
Any questions, any doubt? Fine? Okay. Now, what could be the other sources of income for the trust? Since it has to deposit the corpus donation in the mode specified in the 11.5, it can receive the interest income. So, income from government securities or grants. So, that can be the income of the trust. What else? It can get the capital gain. right? My sale consideration minus the cost of acquisition of any asset. So this shall form part of the total income or the gross receipts of the trust. These are my gross receipts of the trust. Now then starts the application of the income of the trust. So we are done with the calculating the income of the trust. Now we are starting to understand the application. Now understand one thing. With respect to the income of the trust, the 11.2 apply, 11.2 section provides that 85% of the income of the trust has to be applied for the charitable objective. So a trust has to apply the 85% of its income for the charitable activity. Which means what? That the 15% is allowed as the ad hoc exemption. So the exemption which is given to a trust is only when it applies 85% of the income derived from the trust. So up to 15% is ad hoc exemption. So the exemption will be available only if at least 85%. It can apply 100% also. So 15% is an ad hoc exemption it is given. However, this remaining 15% is to be invested in the mode specified in 11.5. So there is an ad hoc exemption of 15% of the total receipts is given. However, this has to be invested in the modes specified in section 11.5. And then the balance 85% you have to apply for the objectives of the trust. Are you clear with this?
Yes,
Yes or
ma'am.
no?
Yes, ma'am.
So 85% I can apply towards whatever object I want to apply. Now, how will I apply for any operational expenses? So balance 85%. I will apply for, let's say, any operational expenses. Now the expenditure which is allowed to a trust, irrespective of the method of accounting followed by the trust, is only allowed on the payment basis. So, irrespective of how I am applying the method of accounting, in that particular case, I will only get the expenditure allowed on the actual payment basis. If the expenses are not actually paid, this will not be considered as expense. This is irrespective of the method of accounting. Are we clear? So if the trust has incurred, let's say 2 lakh as the salary cost. However, it has paid only, let's say 1.5 lakh. So I will get only the deduction or the application of the 1.5. So expenditure allowed only on the actual payment of expense, irrespective of the method of accounting for. Clear? And what is not allowed as the expenses? What is not considered as the application of income? So, what is not considered as the expense? Expense incurred but not paid. That is not considered. So, then any expenditure which is greater than rupees 10,000 in cash, paid in cash greater than rupees 10,000. So here section 40A 3 and 40A 3A are applicable. So expense in cash greater than 10,000 is not eligible. That will not be considered as application of income. Expenditure on which tax is deductible at source and has not been deducted or has been deducted but has not been paid before the due date of 139(1). So 30% of that sum would not be considered as the application of income. It would be considered as the application in the year in which tax is deducted and paid. So, expense on which tax is not deducted or deducted but not paid before the due date under 139(1). So basically section 40A 1A is applicable. So 30% of expense is not considered as the application of income. This will be considered as application in the previous year in which taxes deducted and paid. What else can trust apply for the application? Purchase of capital asset. So that is considered as application of income. Any capital asset that you purchase, any capital asset that the trust acquires will be considered as the application of income, and the entire amount will be considered as the application. Right? However, any depreciation on that capital asset. So since we are giving the entire cost of the purchase of asset as the application, however, any depreciation on that capital asset will not be considered as the application of the income. Are we clear? So any depreciation will not be considered as the application of. Are we clear? Yes or no?
Clear, ma'am.
Okay. So we'll stop here for today because next part will involve a little longer time to explain. So I'm just stopping here. I would request you to revise and we will continue with the application of income in the next class. If you have any questions, I'll be happy to take it up. Otherwise, we can close the session. No questions? Okay. So thank you all today. We'll meet in the next class.
Thank you, ma'am.
Thank you. Session over? Yes.